Crypto trading may seem like an easy way to make quick money, but it can be a treacherous journey if you're not careful. In this video, we'll dive deep into some of the common mistakes that beginners make in crypto trading and provide you with practical tips on how to avoid them. From conducting thorough research to securing your assets, we'll cover it all. So, buckle up, grab a pen and paper, and let's get started on your journey towards successful crypto trading. Welcome to this YouTube video on the common mistakes to avoid in crypto trading. In recent years, the rise of cryptocurrencies like Bitcoin, Ethereum, and others has led to an explosion of interest in the world of crypto trading. However, as with any new industry, there are bound to be mistakes made by beginners. In this video, we'll discuss some of the most common mistakes that beginner traders make and offer practical tips to help you avoid them. Whether you're a seasoned trader or just getting started, this video is for you. The first mistake that many beginners make is jumping into the market without conducting proper research. It's crucial to understand the market and the underlying technology behind the cryptocurrencies you plan to trade. In this video, we'll explain how to conduct thorough research to avoid making poor investment decisions that could cost you a lot of money. Crypto trading is a relatively new phenomenon that has gained immense popularity in recent years. With the rise of cryptocurrencies like Bitcoin, Ethereum, and others, more and more people are entering the market to trade digital assets. However, as with any new industry, there are bound to be mistakes made by beginners. In this article, we'll discuss some of the common mistakes to avoid in crypto trading. Lack of research. One of the biggest mistakes a beginner can make in crypto trading is to jump in without conducting proper research. It's crucial to understand the market and the underlying technology behind the cryptocurrencies you plan to trade. You should also research the history of the cryptocurrency, including its price fluctuations, market capitalization, and any significant news events that may impact its value. Without adequate research, you could make poor investment decisions that could cost you a lot of money. Emotional trading. Another mistake that traders often make is to let their emotions guide their decisions. It's important to remember that cryptocurrency markets are highly volatile and subject to sudden price fluctuations. It can be tempting to panic sell when prices drop or FOMO buy when prices rise rapidly. However, making decisions based on emotions rather than logic can lead to poor trading decisions that result in losses. Not using stop-loss orders. Stop-loss orders are an essential tool for managing risk in crypto trading. A stop-loss order is a predetermined price at which you will automatically sell your cryptocurrency if its value drops below a certain point. This can help prevent significant losses in the event of sudden market downturns. However, many beginners fail to utilize stop-loss orders, which can lead to significant losses if the market suddenly turns against them. Overtrading. Overtrading is another common mistake that beginners make in crypto trading. It can be tempting to make multiple trades in a short period, hoping to capitalize on small price movements. However, overtrading can quickly lead to losses due to transaction fees and the spread between buy and sell prices. It's crucial to exercise patience and discipline when trading, waiting for the right opportunities to present themselves. Not securing your assets. Finally, failing to secure your cryptocurrency assets is a major mistake that can lead to losses. It's essential to store your digital assets in a secure wallet, such as a hardware wallet, that only you have access to. Additionally, you should always use two-factor authentication and a strong password to protect your accounts from hackers. In conclusion, crypto trading can be a lucrative way to invest your money, but it's essential to avoid common mistakes. Conducting thorough research, managing your emotions, utilizing stop-loss orders, avoiding overtrading, and securing your assets are all critical to success in the crypto market. By avoiding these mistakes, you can minimize your risk and maximize your profits in the world of crypto trading. And that's it for today's video on the common mistakes to avoid in crypto trading. Remember, the crypto market can be a wild ride, but with the right knowledge and strategy, you can come out on top. By conducting thorough research, managing your emotions, Utilizing stop-loss orders, avoiding overtrading, and securing your assets, you'll be well on your way to success in the world of crypto trading. Thanks for watching. And if you found this video helpful, please don't forget to hit the like button and subscribe to our channel for more informative content like this.